Alright, so in this video I wanted to talk about charitable contributions and the potential tax deduction available for U.S. individual taxpayers. So the question posed is, do charitable contributions lower my taxes? So do I get a tax deduction if I contribute to charity during the year? Right? So the answer is maybe. Okay? So for individual taxpayers, you are allowed to deduct charitable contributions as an itemized deduction on your federal tax return, so your Form 1040. The deduction is specifically allowed under Internal Revenue Code Section 170A1. So that's the supporting code section where you'll find this deduction. Now, the deduction itself is reported on Schedule A. So Schedule A is the form within your tax return that has all your itemized deductions, and then the bottom line amount flows through to line 12 of your Form 1040, and that line is labeled Standard Deduction or Itemized Deduction. So here's why I say maybe the contributions are deductible. The catch is contributions to charity are deducted, but you only really get the benefit if the taxpayer itemizes their deductions. So if a taxpayer uses the standard deduction, then any contributions to charity during the year are kind of a moot issue. They're irrelevant because if you're not going to itemize, you're just going to take the standard deduction. So here's an example where no charitable deduction will come into play. So John, he's a single filer, so he's not married. He's preparing his 1040 for the 2019 tax year, and he contributed $1,000 to charity during the year. And John has no other itemized deductions, okay? So John's contribution to charity is a moot issue because John is eligible for the standard deduction of $12,200 for that year. And because the $12,200 far exceeds the $1,000 to charity, and we've already said he doesn't have any other itemized deductions, he's going to take the standard deduction. And once you take the standard deduction, the $1,000 to charity isn't reported anywhere. Okay? So John's contribution to the charity, again, it's going to be a moot issue in this context because he's going to take the standard deduction. Now, here's an example where it might work, right? So Frank is a single filing taxpayer, so the same as John, and he's doing his 1040. Frank contributes $1,000 to charity during 2019, same as John. But Frank also has mortgage interest paid on his home, so he paid $12,500 in mortgage interest, and he paid property taxes of $1,500. Now, Frank's total itemized deductions are $15,000, right? Because he contributed $1,000 to charity, $12,500 in mortgage interest was paid to his bank, and then he paid $1,500 in property taxes. So $15,000 total. Because his itemized deductions exceed the standard of $12,200, Frank is going to itemize deductions rather than take the standard because the itemized deductions provide the greatest tax benefit. So in this fact pattern, the charitable contribution by Frank was in effect tax deductible because Frank had these other itemized deductions which exceeded the standard. So that's basically the play you're looking at here is, contributing to charity, obviously do it first and foremost for philanthropic, needs or other means. But if you're asking about the tax ramifications, these are basically the two simple fact patterns to keep in mind. If you contribute to charity, but you're going to take the standard deduction, then the charitable contribution isn't going to matter. It's only if you're itemizing. Now, what was unique for 2020 was they modified the rules a bit where if you were an individual, you could deduct up to $300 in charitable contributions even if you didn't itemize. So if you didn't itemize deductions, you took the standard, but you contributed $1,000 to charity, you could write off up to $300 directly against your income just for that year. So that covers it. I hope that was helpful. If you have any questions, please leave me a comment below. Happy to answer those, and I look forward to seeing you again soon. Thank you.